So welcome aboard for our webinar today. The Gates Foundation has asked the National Alliance to host a webinar on accessing capital with a specific lens for school leaders and lenders of color. So today we're joined by participants in two different transactions, both the board member and head of school from Genesis Innovation Academy in Atlanta, Dr. Sams and Mr. Lawrence, and their lender, Khalif Davis from the Reinvestment Fund. And then from Kansas City, we have the school leader of Scuola Vita Nuova, I might just say SVN from now on, Nicole Goodman, and her lender, Karina Vadillo from Equitable Facilities Fund. So we'll ask a few questions. I'll ask a few questions. Please put your Q&A or your questions in the chat room. We'd certainly love to hear from you, sort of like the radio show, and we'll take callers from across the country. And so we'll ask a few questions. We'll also ask if there's any particular aspects of the borrowing experience that either the schools and or the lenders experienced that may have a different perspective through a lens of leaders of color in this case. This is one of the few forums I think we've had this conversation in public, so I want to thank everybody for their authenticity in the discussion, which I think we're all getting, we're all hearing about more this year, and it can open up everybody to some sense of vulnerability. So thank you very much. We'll get started. And again, if you have any questions in the audience, please stick them in the Q&A. Why don't I start off with Ms. Goodman? How did you begin to start the process of looking for a loan or finding capital? What networks might you have tapped into, or where or how did you find people to begin this conversation? And that question may or may not have some unique aspect as a school leader of color.
Sure. Thank you, Mark. We were actually fortunate to receive a previous grant that was focused on our programming. And then when we were looking into our facility needs, which can be challenging because not very many people, it's hard to find people that will invest in brick and mortar. So once we realized that facilities were a need for us, we tapped back into the network from our previous grant and asked them for connections, advice, other people that we could reach out to. And we also just did our own research. And when we started to do that research, we realized that the Walton Foundation, for example, was a part of EFF. And so we reached out to our resources to help us understand what our next steps and processes, what we needed to do to pursue this application process.
It sounds like you had a trusted advisor that you could turn to for some help in this whole discovery process.
Absolutely. And I'm not going to pretend that I am an expert in finances. Again, I am on the programming side, but having a very strong chief financial officer was very instrumental in helping guide us through this process.
Great. Moving over to Atlanta, Dr. Sams, I don't know if you have the same perhaps trusted advisor you could turn to, or if you had a different process by going through it. Mr. Lawrence, if you want to weigh in on that experience as well.
Yeah, I think if there's a question of the technical side, I will definitely defer to Mr. Lawrence. I think the network question is always the question. And I think I was fortunate to have my original board chair is in real estate. And I think he knew Mr. Davis, he knew Mr. Lawrence, he strong-armed Mr. Lawrence to come on our board. Probably, I don't know what he said to Mr. Davis, but I do think if we want to talk about being a school leader of color, I think that was the fortunate piece. I did a charter school before, and those connections were not as present, and it was a much bigger struggle. And typically in the communities of color, the networks are going to be smaller and harder to sort of get beyond the constraints that, you know, exist just because of, you know, where we are in this point in time. So definitely fortuitous, definitely blessed to have that. And so in fact, it led us to, I literally have 4 board members now who are familiar with the real estate space, which is great because, like Ms. Goodman, it's not why they gave us these, you know, roles. So those personal connections with people who have 1 or 2 degrees worth of separation to somebody who can make this happen, absolutely important, and just very difficult often if you are a leader of color. It's just the way it is.
Dr. Sams, be careful about saying how many school leader or how many board members you have. People are going to come poaching them pretty quickly.
They're under contract.
Mr. Lawrence, it sounds like you perhaps got strong-armed into this position, but it'd be great to hear.
No, not at all, not at all. But I think Dr. Sams was very fortunate to have his original board chair have that background. But what I would say is that I think as charter schools, especially charter schools of color, you know, you want to have someone with some level of finance experience as a part of that you know, board membership. And boards, you know, are there, you know, to really add value and to, you know, create a climate that, you know, they can help open up doors that the head of schools may not be able to open. That's the value of having a board. And I experience it with my clients who are, you know, those clients that are growing at an exponential pace are my clients who have board members who can add value to whatever it is that they're, you know, endeavoring to do. And so for me, it was really about the opportunity to help and assist. But, you know, Dr. Sams they've put together a very solid board. And so, you know, and I didn't do this myself. There were other folks in our finance committee that were able to help and assist and make this load a little bit lighter.
So both of you had different channels, one a trusted partner, a philanthropic partner, and the other a strong board connection. Can you think of, for the school leaders in the audience who perhaps don't have either of those, were you informed of any other resources that people could tap into rather than have to turn around and either develop a relationship with a board members and or a philanthropic partner? It's possible there aren't any resources. I just don't know if, given your experience, you thought of anything else people could do.
I can't really think of anything besides, of course, our local bank was a resource, but they didn't have we weren't qualified for the necessary loan that we needed to do the project that we needed for our facility addition. So that is an option. New market tax credits were an option, but I know that's changed a lot, and timelines, and et cetera. So those are out there. But again, like everyone else is saying, having that strong board and a strong chief financial officer on your team is very important to navigate this space.
Yes, I would say that the National Charter Association, the conferences you can connect that way. Our state infrastructure also has relationships with various potential partners, and also through their conference, but also through just knowing who they are. And they're very supportive in this. I think the distinction, though, is if it's me trying to vet those opportunities and being vetted by those potential partners, it may not go as well. So if I'm talking to Mr. Davis about school and finance, I mean, there's something he's looking for, and I just may not know how to get there with the answer. And it's helpful to have people to kind of walk me and him through that process, who know what I'm about, what I'm trying to do. And it's a relationship. And so it also helps that if your finance potential partner either knows or has some history with, or through conversations, I think can trust that, okay, this is a deal that makes sense. Because I think if you're going to finance, you have to trust also the people, the board, and how is this looking. And so, because otherwise, I think you do wind up, you could either get involved in a situation in which, as a school leader, you get a bad deal, or maybe no deal because you weren't sure how to create a relationship that would work for both parties. And so there are resources, and I guess to be direct about the answer to your question, I think there are, and I've seen lots of them. I've got emails, I've been connected, but it mattered that there were people who could have the conversation on my team.
Kathy called in from New Orleans with her suggestion that you could hire a development partner to either be your developer and or your financial broker as an alternative as well. So once you were exposed to your potential borrowers, both EFF and Reinvestment Fund, and they came with some recommendations. Did you take that? Did you shop your deal around anyway? How did you know, was it the recommendation was strong enough that they became your trusted partners? Was there something special about the relationship that really made you begin to develop that level of trust? Dr. Sams, you already mentioned this, that you really think is needed for this kind of transaction. Ms. Goodman, we'll go back to you.
I think that working, again, I'm not going to act like I'm the expert, but through this process and working with EFF and Carina, I just felt like they took the time to really explain the process and to go over everything in detail and what they were looking for, what we were looking for, and just working to establish that relationship. And again, I know my chief financial officer, which I think she is not on this call, but really working with her and other board members to make sure that this was the right fit for us.
I think this is where I would defer to Mr. Lawrence just to kind of walk through that.
So I think there were, so.
You faded out just a second. Is there a?
Sure. Can you hear me okay?
Perfect.
Okay. So I think that the previous board chair, one thing that he did is that, he sought out Mr. Davis, but we actually had a grid that we worked off of that had various lenders that we were having conversations with. So there was the local banks, and we had them side by side with, Mr. Davis's institution. So we, it was a competitive process. And so one of the things is that, the lenders want to lend money. Fortunately, we have a school that's has a solid balance sheet. It has, good leadership, all of those things, some of those qualitative things, and the financial items that, Mr. Davis and others are looking at. So but we understood we have an existing facility. We didn't bring, it's not a ground up construction facility, and what we have a bigger goal. So what the financing is the means to achieve the goal. So a lot of what led us to Mr. Davis was not just that he lent us the money at the lowest term, is because he actually understood what we're trying to accomplish. Our larger goal of having flexibility, an ability to grow our school. So our existing facility may not be the facility in 5 years that we're in, but we needed financing now. And so we were able to structure a deal that worked for and in concert with the goals that we had set for the school. So that I think that's ultimately where the business was won and why they were the right partner for us.
Okay. I'll ask the follow-up on the lenses being a school leader of color. I don't know if the institutions you worked with, you thought were somehow a better fit, or maybe, it might have been that at this point, money was just colorblind.
Well, I would say this on at least in my interaction, is having a partner, that understands, and is predisposed to understanding what Genesis is trying to accomplish. That helps. And there are folks across, the entire spectrum that want to do the right thing and work with you and be thoughtful. I know Mr. Davis was, for us, he was that partner, right? He understood, he had an appreciation for it, and he and I actually spent a lot of time. He probably didn't notice, but I was kind of filling him out about his background, where he came from, and for me, those things checked those boxes. He understood. He had grown up in this community, and that's it's not a luxury that you always get with your lender. That's not going to be the case, but we were just very fortunate. And so all of those things were important, in a decision-making process.
Thank you. Well, let's talk to Mr. Davis and Ms. Vadillo. Your organizations, are there ways that you promote your products and design the way you do lending that you think might be unique for the schools that you're targeting in your portfolio? And I don't know if those are necessarily always schools led by people of color, but charter schools disproportionately are serving more students of color for sure. How is it that your organizations think through this and the way you reach out to your potential borrowers? Khalif, you want to start?
Yeah, sure, Mark. So I'll start off by saying Reinvestment Fund has a long track record of supporting charter schools. So, for over 20 years, we have provided capital to schools working to transform structural inequities in education, particularly for schools serving students and families with low-income backgrounds. So our capital has supported schools in all stages of development, from single-site startup schools with a limited amount of cash to more mature operators looking to expand to new geographies. So this perspective of just being in the charter space, so for many years, affords us an opportunity to deeply understand the burden charter schools face in just finding sustainable and affordable spaces to grow and thrive. So given our history, I think what is most compelling to school leaders interested in our product, and Mr. Lawrence and Dr. Sams can attest, is the flexibility we're able to bring to a project. So in practice, this means providing loans with loan to value limits that are higher than what's traditionally offered by a bank, more lenient collateral requirements, affordable loan structures to allow for enrollment growth, and just other just interesting or unique ways to just make projects happen. Because I assure folks, completing a school facility project is not as easy as what it seems. So we pride ourselves in just pretty much turning over every rock to ensure we've looked at all the possible scenarios to support a facility project. If the school is it's aligned with our mission. So we'll try to do our best to make it happen. And I also wanted to bring up another attribute that Dr. Sams kind of mentioned earlier, which is trust, right? We're not immune from the public mistrust of our nation's financial institutions, particularly the mistrust felt by particular communities of color. So I think, trust was a big factor in just garnering interest from Genesis and schools like Genesis. And so, Mr. Lawrence, he mentioned, we were having conversations just to, talk about, where I'm from, what I'm about, ultimately my personal why. And I come to this space, not just because it's a job to in commercial real estate, right? I really think, there's a value of, institutions like Reinvestment Fund in supporting schools and gaining access to the facilities to support their students. And so given our history, I think we have the advantage of folks just asking around. And so we're very much open to schools checking our Carfax, quote unquote, and just reaching out to other schools, associations, different intermediaries, just to see what we've done over our history, right? And so I think that's also really important too.
Thank you. Karina?
I'd say for EFF, since we are kind of a startup launched in 2018, there are a number of ways we try to sort of promote our product and who we are. And one of those ways was by visiting sort of these high needs communities across the US, which hopefully we can start resuming soon. It was actually in late 2018, our chief credit officer attended a charter school conference in Missouri. And so that goal of that conference was to sort of meet folks in the charter school community, as well as potential schools we could work with. And that also represented a market we were very interested in and to expand our footprint. And so our chief credit officer met with various people, including the SVN team. And because at that time, we had just sort of launched our fund from a generous philanthropic gift from Jim and Alice Walton, as Nicole mentioned, we were just really starting to prove out our model. But we knew from the beginning that we had this very beneficial product for charter schools. And that was really to save them money relative to other financing options. And so when we spoke to SVN, we knew they were considering sort of new money for construction, as well as refinancing debt. And so we had quite a few conversations over the phone, via email. And what I think was most compelling was providing the school a comparison of what the EFF loan terms looked like relative to the municipal bond market and as well as a short-term loan. And so I think outlining like, here are the potential scenarios, here's EFF, there's no debt service reserve fund, it's fixed rate interest, 30 years, no loan to value ratio, minimal closing costs, relative to the bond market and a potential bank loan. And here's how it boils down to your annual debt service. I think that was very compelling. And I think that's how we all sort of aligned on this is sort of the best option for the school to pursue.
Thanks. So we spent some time talking about how the process happened, how you came together. And we've talked a little bit about the importance of trust and relationships and some of the networks that you had to make this come together. Once the transaction began, for Khalif and Karina to start, were there steps in the transaction that you thought you were either more flexible on, or that you had to explain perhaps more in detail about how this works, or that you think just might have been different, or perhaps weren't different, but you even wish could have been different in working with in essence both single site schools or with a couple of schools in Atlanta, led by school leaders of color, as opposed to maybe a big network that has really strong boards of philanthropy and access to more sources of capital.
Yeah, so I'll start with this. I think it's my job at Reinvestment Fund to, one, advocate for the borrowers internally that I work with, but two, also try to maintain our quote unquote, credit box, right? So that we can continue to support our mission in years to come, right? So, going into this relationship with Genesis, that was very much, present in my mind. Also, from Genesis standpoint, immediately they just expected, flexibility, creativity, and transparency from me as a lender at all times, which, I frankly expect from any lending relationship that I have with schools. So for instance, at the term sheet stage, it was initially intended that one lender would support the project in consideration. But Genesis ended up having two very, very viable offers from us and another mission aligned lender through their, I wouldn't say shopping, but just comparing, what other institutions were out there. So at the end of the day, the two lenders, ended up joining forces to strategize around the best solution. And that's not uncommon for, CDFIs and others in the industry. I think when we actually got to due diligence and underwriting, I'll frankly say that they weren't without, hurdles, right? So for instance, I remember us ordering an appraisal of the school and the value came in lower than, and Jeff is smiling because we had long conversations about this, but the value came in lower than the proposed loan amount. And so both Genesis and the lenders had to really roll up our sleeves to come to a solution that made sense for both parties, which meant a good amount of back and forth with the school's board, Dr. Sams, who was still learning in this space, time to receive other data points to provide more context to the property's value, and just generally just compromise on both sides. And so I think it's important, particularly for schools, they're just entering in this space. And it's important to kind of lay that out there and just, provide, an understanding that there may be some twists and turns, but, we're in it for the long haul, right? I think another aspect of our process that's kind of unique to mission aligned lenders is that we, always go beyond just understanding the financial story a school's audits and projections tell, and we include a multifaceted review of the school program. These days, given a greater emphasis on understanding a school's commitment to racial equity and how it's operationalized in the school. I remember a conversation with Dr. Sams where I had to, share why that mattered to us, right? Versus looking at your financials, looking at your projections, wrapping it up and go. And so just to bring this back around, again, my job is to, advocate for the school, but my job is to, preserve our capital so we can continue to do what we do. And with as a mission aligned lender, we have that other aspect to our lending business, which means we're very keen on the program and its impacts.
Thanks. Karina, any continued thoughts on that?
Yeah, I'd say at EFF, we have a pretty extensive underwriting process, multiple opportunities to go to our committee and make the case, and then ultimately to our board, which approves. And so we asked for quite a bit of data, and we also asked a lot of questions from the school, especially around, enrollment and demand, academics, governance, financials. So we were communicating with the SVN team pretty often, holding biweekly calls just to go through, every question I had to make sure I was really capturing the school story accurately in our memo. And this memo is sort of the document that our committees review and approve the loan. And so I flew out to Kansas City to meet with SVN, walk through the campus, just got a really good sense of the school and wanted to make the best case for them because the work they're doing for their students is you know, it was very impressive. It's very impressive. And so that's what I worked towards for a few months, and I appreciated all the back and forth. I'd say one unique part of the EFF model is that we work with our borrowers and ask them to obtain or maintain an S&P issuer credit rating. And so this was SVN's first time collaborating with S&P, and we worked really closely to make sure the SVN team felt confident and well prepared going into that presentation with the S&P analysts. And I remember I flew out for the S&P presentation as well. And I was on the plane just like working with SVN team to like finalize the PowerPoint presentations and to make sure it was as accurate and clean as possible. And so we were working till that final morning on the deck. But it was a great feeling because I remember seeing, you know, Nicole and Mary, the CFO, standing there proudly, like saying, you know, we're a great school and we have a case to like be very close to investment grade. And it was great to see, you know, outside audiences like recognize the work done by these ladies. And so, yeah, I'd say it's very much a relationship. We're sort of deep diving into the school to learn more as much as we can about them, because this is a long-term loan, and you know we want to make sure the school reaches out to us if something were to come up in year 3 or 10 of the loan, and we're here to help. And I'd also say with SVN, we closed the loan. It was in the midst of COVID-19, so you know it was a very uncertain time. We didn't know about, there was a lot of interest rate risk, and we were able to work through that process and close the loan. And we guaranteed savings for the school of about $3 million over the life of that loan. And, you know, I just was really proud that we were able to work with that school through this really unexpected time and also getting them to the finish line. So, yeah.
Thanks. So to the school leaders, you were sort of at the opposite side of the table during all of this. You know, were there aspects of the underwriting and due diligence process that you thought you had to explain the uniqueness of your school too? So Khalif has already referred to this appraisal, right? And we find that properties appraised usually below market value or below what a charter school's market value is in lower income communities, which are often communities of color. And that is one of the structural biases, I guess, against lending to real estate in many communities. So that was one example that he mentioned. I don't know if there were other aspects of your school that you just had to explain a little bit further about why you might have been different from what a financial institution would normally see, or if there's more details about the appraisal process you went through. Either Dr. Sams or Mr. Lawrence, I don't know if.
Well, I think we had, you know, we went around because we had to pay off some existing. This was a refinance, not a new loan. I mean, it was a new loan, but it was a refinance of an existing debt. And so there were costs to get out of that deal, and we were looking to maximize loan proceeds to do that. And so the appraisal was important. And again, you know, going back to, you know, the comment I made about, you know, having a partner that is willing to work with you. You know, Mr. Davis and his firm, they came back and actually increased the loan to value to generate more loan proceeds for us. And they understood our mission. And I think, listen, I think it helped that we were in the balance sheet of the school is in a healthy position. I mean, we're, you know, very fortunate, but that didn't happen by accident. That had to do with, you know, Dr. Sams' leadership and the board that was in place long before I came along. So we were in a very good position to at least ask for that accommodation, or for them to even think about that accommodation. So you know, but as far as, you know, working through the items, Dr. Sams, you know, there were certain things that when he and I would talk offline, you know, he'd say, hey, well, why are we getting into these questions? And I said, the good thing is we have a partner, you know, Dr. Sams, they're not just looking at the fact that we've got a strong balance sheet, they're looking at some of the other just qualitative things that we're doing at the school. That's part of their assessment. So that's why we're being asked about, you know, certain things about our enrollment, and things like that. But, you know, I looked at it and felt that, you know, our financing partners were very patient. They were helpful. I'm not in the business of, you know, working on charter schools. It was important. I mean, their willingness to take the time to help us understand what we needed, why we needed it, was, you know, an imperative. And it made us, again, feel like we selected the right part.
Yeah, I would say, I hope you can't hear that there's construction in my house. Sorry. Okay,
You're
good. So I actually learned over time that some of the questions we were being asked on the school side were sort of par for the course and reasonable. But I will admit, my initial reaction was paranoia. And it does matter that Mr. Davis was somebody who I felt like at some point I could just say, what are we doing here? And not feel like it would go off the rails, because I have been in this business for a long time. And often when people want to come and help you and they start asking certain questions, you start to wonder where it's going, just to be honest. And particularly when you're told that the reason behind the question for you doesn't mean the question makes any more sense than it did when you first saw it. Like, I was like, if that's what you want to know, I don't know why you're asking that question. That's not how schools work. That's not how this community works. And so I'm typically wary particularly when it's financing and things like that, and there are all these other questions about what's going to be done with this data and information. How is it going to be perceived by people who have no idea what we're trying to do? So in that case, it does matter. I do, though, I will reiterate, I think also having Jeff saying, Dr. Sams, calm down, that was helpful too, but I also know he gets it. So I think you were kind of hinting before when you asked about the lenders. I mean, yes, having a lender who is both of color and who is of the community, because those aren't always the same thing, it at least puts you at ease. And so when there are other people on the conversation, then it feels more like a professional conversation, because you're not as worried that no one in the room understands what you're talking about. So they did walk me through the unique aspects of our school, and I do feel like the patience mattered, and we got where we needed to be. But all those things that you were hinting at, I think they do matter quite a bit.
Yeah, there are, I mean, I think there's just unconscious bias in the financial systems. Well, first of all, I'm sure there's direct discrimination and direct bias, but I mean, there's unconscious bias on, you know, schools in really needy areas, or sometimes single site schools, and the school leaders from that community, and they're not interested in growing. They want to serve that community. Right? And we know that sometimes the philanthropic community is looking for scalable solutions, and not everybody's in this business to be scaling. Or student enrollment and even academic performance, right? Like in communities, in the neediest communities that have really high mobility rates, you know, you can have 20-25% of your students are picking up and moving out, and then you have to backfill them, and now those kids are coming in with different academic performance scores. And some of the systems that I think financial institutions have created don't always accommodate or even understand that there are those unique circumstances for schools in some of our neediest communities. Ms. Goodman, did you have, were there unique aspects of your school that you had to explain to EFF?
I remember, I was kind of talking listening to Dr. Sams a little bit. It does feel, at first it does feel like you're trying to defend your case and what you're doing and why it's effective or why someone should invest in you. So once you get past your emotions and the stories we kind of tell in our head prior to that, I did feel once the process got going that really EFF and the team had a genuine concern. They really cared about the vision and mission of what we're trying to do when they would ask questions. I really do feel like they had a genuine interest and would dig deeper into our data. And, you know, the reality is that, and I am, when you were describing, I'm a single site, small charter school. If you were to look at the demographics and our location, people make a lot of assumptions and judgments. We serve over 90% kids of color, and our kids can be successful. But if we're not providing, the academics are important too, but facilities do matter. And when we continue to not have those, our kids not having access to that, it's very frustrating. So going through this process, it was just inspiring to know that there was a group of people that really did care about the work and taking the time to learn more about us, our vision, our mission, and investing in us and working hard for us. And knowing that, you know, at this point, we are going to continue to be a single site, and that we're not at this point, you know, trying to scale. And I do feel like sometimes those are the pressures that you have, and of people, in order for people to consider investing in your school and your mission.
Right. We did a question got posted here in the direct chat area. Sort of building on this discussion we're having here. So it says, more and more we're hearing how lenders are trying to address systemic racism and redline in financing. There's still a lot of work that needs to be done nationwide. Are there changes that you all, having gone through this process, might hope to see to address these issues and help, you know, the next round of charter schools that have to go through this, either serving students of color or led by people of color, and try and resolve this? Or can you think of recommendations that either your own financial institutions, for those of you who work at them, or your lenders for the school leaders, could address to make life easier for the next round of schools? We ask Khalif and then Karina if you want to speak from the lender side first.
Yeah, I think that's a really good question, and you know, something, you know, I personally continue to think about, and then my organization, you know, thinks about, and you know, a broader set of peers in the CDFI space also thinks about. So, you know, just as backstory, for the last 3 years, Reinvestment Fund has been a part of a collaborative known now as the CDFI Racial Equity Collaborative on Education, to really think about, you know, how we approached, you know, financing to charter schools in the past, learning from that and thinking about what ways we can improve upon how we finance schools in the future, particularly for those schools that serve, you know, Black and Latino population. So it's a learning community where, you know, we share best practices, get into the technical weeds of, you know, what can be done, you know, with capital to make it the most flexible. I think, you know, all of those CDFIs, which, you know, helps us in having those conversations. We all have access and receive awards through the U.S. Department of Education Credit Enhancement Program. And so that enables us to, you know, be more flexible with our capital. I will say though, you know, the position of a lender is a powerful position relative to, you know, working with schools or borrowers, you know, requesting financing. And I personally don't take that lightly. And, you know, my organization doesn't take that lightly as well. And so in these situations where, you know, we're kind of gaining more information, going into the details, being more nuanced around what makes schools really, really work. I think, and a bunch of school leaders pushed me on this, you know, Dr. Sam being one of them. that in that quest to make sure, capital goes to schools and, school leaders doing great things, it's important to kind of be sensitive to that relationship and, the power within that, inherent power within that relationship. And, try as best as possible to, level the playing field, to be more one of, I'll say, advocate, versus, the lender borrower relationship. I mean, let's face it, at the end of the day, we both sign, a contract, but to get to that process, it doesn't need to be exploitative. And so, yeah, I'll just leave it there.
Any thoughts on that question from the audience?
I think that's very important and something EFF is trying to make more explicit in how we allocate our capital. We have some of our funds dedicated to leaders of color. And so we hired a business development principal who is focused on efforts of trying to reach out and trying to find these charter school leaders of color who are in need of our loan product. And, we're hoping that we can secure some of those loans in the coming futures or near term. And so I'd say in addition to being, more proactive in our approach of sourcing and reaching out to these communities, we also recently joined Impact Frontiers, which is an initiative to create an impact methodology. We're part of a CDFI cohort working with Impact Frontiers to ultimately create an impact rating. And for this rating, we hope to have a racial equity lens component to it. So really feeling good about the loans we do and ensuring that there is an impact and we can, measure it, engage it, and report it out in some way. And so we feel good that, once the money is deployed, it's going to good work, and just getting smart about, the way we evaluate these loans and making sure that we are genuinely serving the communities we desire to have the greatest impact we have. And so, we're still in early stages, but always actively looking and, dedicating our capital to these schools that are in underserved communities, are led by leaders of color. And, these are schools that we recognize are maybe single site, single charter, with no long-term expansion plans, but they're doing incredibly good work to the communities they serve.
It's an interesting point. I wonder if the sector as a whole needs a transparency dashboard of some sort that shows how much capital is flowing to either communities or schools serving students or being led by students of color or people of color. Mr. Lawrence or Ms. Goodman, Dr. Sams, any thoughts about ways we could change or improve the system to help overcome some of these biases, either unconscious or conscious?
I think there's a couple things, right? So what my industry is commercial real estate, and there are not a tremendous amount of people of color in this industry at all. And so that's going to be the challenge. That's going to be a challenge, right? So, but I think what you find in most people that are in this space, they're motivated, some for altruistic reasons, some purely for financial gain, and nothing wrong with that. I don't, no one works for free. So I think one of the things that helps knock down barriers is for people to understand what is the business opportunity, right? Because if you are the, the 1,000-pound gorilla in any arena, and you can offer up a product that is needed, and you can charge a fair price for it, that means you can make money doing it. If people understand the business opportunity, that starts knocking down those barriers. Because when people understand that these are good opportunities, there's business opportunity, people I don't know if their biases disappear, but their biases dissipate. all right? And when people understand that there is financial gain to be made, there is something very powerful about capitalism. It will make people open up their thinking, okay? So I think understanding the opportunity is key for lenders, right? So, you know, conversations like this, so, you know, with organizations like this to help educate, lenders, spending the time with them, you know, inviting them to participate, you know, some of the larger financial institutions, invite them to participate in opportunities like this. If it's getting credit for, putting out dollars and it helps them, expand their footprint into other places. There's nothing wrong with, holding their feet to the fire to make them put out money to charter schools, in particular charter schools where, we have charter schools of color. I think that's an imperative. But understanding that, hey, look, there's a business opportunity. I think people understanding that what that looks like is important. It is an important first step.
Thank you. Well, if either anybody else wants to weigh in on that, or there's also a question sitting in the Q&A box. This one's directed to EFF. How many loans has EFF closed since inception? Are there any restrictions on geography or the length of the charter term? How long the school has been in operation? I don't know, Karina, if you have any data you could share or information you could share about that.
So I should know the exact number. It's above 20, I think below 30. So we've got a decent number of loans under our portfolio representing just over 400 million in assets under management. And with respect to geography, no geography restrictions, state agnostic, city agnostic. And with years of operations, we do like to see 3 years of audits, but we're recognizing that if we really want to dedicate our capital to leaders of color, we may have to look earlier stage. And so we are open to schools with leaders of color who, may not have those 3 years of audits yet, but are working towards it. So, I'd say that underwriting, that strict underwriting criteria, hopefully we can work on with that right school partner to reach a solution. So.
Very good. And I presume on your website, you'll probably have the exact number of closed loans and to the dollar what the financings are to date. And,
yes.
So I think on the next slide, we'll have everybody's contact information for those schools who are interested in learning more about the financial products offered by both Reinvestment Fund and Equitable Facilities Fund. I don't know if Dr. Sams or Ms. Goodman, any closing thoughts on ways we could change the system. I, can offer other suggestions of where I think there's sometimes bias, right? And as financial institutions are reviewing biographies of school leaders or biographies of board members or the extent of board members, right? As we've already mentioned, sometimes in some communities, the social networks are just smaller and there's a smaller pool of people to select from for those board positions, or biographies of school leaders may have come from a different background than what financial institutions are used to seeing. I think somebody also mentioned the cash balances. So I think Genesis was blessed to have a high cash balance, but right, sometimes schools in really struggling neighborhoods need to spend every single penny that comes in the door to help some of those neediest students get caught up, and they just may not have the time to build up cash reserves that a lot of institutions are looking for. So I think there's just unique aspects to some of our schools that we're not always seeing reflected in the underwriting and due diligence process.
Yeah, I mean, I think it's tough. I think Jeff's point is probably the way a lot of these things work, and not just in education. But we also know, it does still come down to relationships, and it's hard to systemically create something that changes the way people view things, their hearts and minds. You know, people could collect a lot of data, see an opportunity, and we get the financial crisis that we got, right? So that was seeing an opportunity in communities of color, but in sort of the wrong way. And so it's a little nerve-wracking. I mean, if I could create some push, it might be to, as I think it was said, to get more institutions involved, but maybe it's on boards, maybe, I mean, but I don't know how you get people to do that systematically. But I think if you're on boards, it doesn't have to be everybody or every board, but that would be an interesting thing, because you're not, now you are sort of, you have a vested interest to make sure that the school that you're on the board for really has a better understanding of how these things work, and these conversations from somebody who has a vested interest and can make somebody sit down and see the opportunity on the business side, but you have somebody with you at the school level who sees it as more personal as well, but again, who understands the industry. So I'm just saying that because that's, I think, why it worked for us. And I just don't know, you know, how you could systematically encourage that or make that happen. But there's a lot of energy around reinvesting in neighborhoods and communities and in education in the season we're in, and maybe that's one way for people to do so, to get involved in that way, get your hands dirty, and you're sort of forced to learn how these schools work and how these communities work at this level, but you're bringing your particular expertise to it. And maybe that would help. But I don't think that's a systemic thing that we could create or legislate. It's just relationship building.
Yes, and I think it's important to be intentional and just making sure that we continue to be inclusive. Sometimes as a leader of color, sometimes we're the only one at the table, and we don't, we're not invited sometimes to some of the, we're not invited sometimes, I feel like, or we're not aware of other resources that are out there. And when I think of, I probably would not, I know I wouldn't be where I am today without, for example, the Charter School Growth Fund, and being intentional and being a part of the Leader of Color group and them investing in our school. Like, that was the first thing, and it opened so many other doors, and they continue to support us and and for me to learn that business side of this work, because I'm passionate and love my community, and it's about providing, making sure that all of our students have access to a quality education. And so for me, it's just switching that lens and understanding that business part of it as well. But somebody also taking the time to continue to help me navigate and educate me in that space.
Yeah. Well, thank you very much for your thoughts. We just hit upon the hour mark. And thank you for a open conversation about an issue that I think that we're all struggling with from time to time. And thank you to the audience for your participation. For those of you who want to know more, here's a couple of resources, a couple of websites, a newsletter. There's a LinkedIn group for charter school facility professionals. You can send me an email for any further information, or if you want the email addresses or contact for any of our panelists, please feel free to reach out to me. So thank you very much, everybody, for your time. Please take care of yourself and stay safe. And if you can, please help somebody else take care of themselves and stay safe too. Have a good day.